The REC Shares weekly dividend ETFs. Are they worth holding? Are they dropping in price? How do they compare against the competitors? In this video, we are going to cover the new weekly paying REC Shares ETFs that launched a couple of months ago. We're going to track their distributions and their NAV to see how it's been holding up, and again, how they compete to RoundHill, to YieldMax, and some other very popular weekly dividend ETFs. I'm really excited about this one. If you are interested in weekly dividends, in monthly dividends, you are in the right place. Don't forget to like the video and to subscribe so you never miss future free content and you always know what is making income investors the most money in the stock market. Let's roll that intro. You might know me as the ETF nerd, the ETF guy. There's a lot of names I go by, but let me tell you, there's a reason for that. These ETF companies are kind of nuts, and there's a reason I'm saying that. We have seen such an influx of ETF providers and issuers creating weekly dividend ETFs. We saw RoundHill, we saw Granite Shares, we saw REC Shares. They continue to make these weekly products because people are really liking them. So I am really curious how they do stack up together. I may have to do a video of the REC Shares weeklies versus RoundHill weeklies on the same, because from what I've seen, the RoundHills do better sometimes and the REC Shares do better sometimes depending on the market. But it is really crazy that we have these ETF providers that used to only do 2x long leveraged options, which I like. I like the leverage plays, not leverage options, even just leveraged ETFs. And now they've moved it into income. So we're seeing a huge influx of money and issuers moving into the income space, which I love. But REX only has 4 weekly payers, and I'm wondering if they're going to add more soon. The 4 current weekly payers are COII on Coinbase, MSII on MSTR, NVII on NVIDIA, and TSII on Tesla. You guys know Coinbase and MSTR, the implied volatility is usually very high. I would say Coinbase has been outperforming recently for a lot of the income ETFs compared to MSTRs, but both very solid picks. NVII, NVIDIA does well. It's usually not a monster in this space because it is so large already. And TSII, Tesla's all over the place, sometimes in a good way, sometimes in a bad way. But I want to know, what weekly payers would you add to this lineup? When it comes to a company like REC Shares, they're competing with YieldMax, with RoundHill, with Defiance, with Granite Shares now too. I don't know what I would do. I might mix it up and go for an underlying stock that no one has done yet. Could be very, very interesting, at least for a weekly pair. But who knows? Let me know what you guys think in the comments. And I will say the distribution rates on these can look a little bit lower, but they're factoring in growth and income. So you're not going to see an insane distribution rate on these compared to some of the others because of the strategy that does provide some growth. And I like this. So what we're looking at, it's balanced growth and income. Half the portfolio is going to generate weekly income via covered calls. And we've seen this option strategy go all over the place, but typically it's on more than half the portfolio. But we have the other half covering with some growth. And this really helps when we've seen crazy markets like we have. It may be a little bit slower depending on the underlying market. And in a sideways market, it would likely underperform one that goes all in. In a downward market, maybe it would hold up a little bit better. We'd really have to see those style of markets to understand this. And I will say these ETFs have not been out for a very long time. So remember that. These are new, and we've been in a very, very green market. Like very green. I don't think everyone realizes how good the market has been to us in the last couple of months. So these are higher risk. I don't think that REX is as high risk, even though they do have a little bit of that 1.25x target. But I really do think it's an interesting strategy, and I'm really curious how it holds up against some of our competitors. Now, in comparing COIW to COII, the Coinbase fund, we can see COII underperforms. It's up 5.25% compared to COIW's 19.6%. I will say COIW was absolutely cooking until Coinbase absolutely jumped off a cliff this last week. I think they had earnings or something, and it just caused the stock to tank. So I'm not surprised to see this, but I am surprised that COIW has such a strong lead on COII. Now let's check in with YieldMax and see if COII can keep up. And here we can see that it can. It can outperform, but I will say CONY is not my favorite YieldMax fund. It's not even close. I have held this thing in bad markets, and it's absolutely torched my investment, and COII has held up a little bit better. So I do think in the long run, because they have the growth aspect, that the REC Shares will be a safer pick because of that half growth, half income compared to something like CONY. And what I mean by that is in a bad market. Now we can see though, at no point was COII underperforming COII. COII has been underperforming nearly since the inception, and it fell off even more despite not performing as well. Now, one key aspect with these is timing. Like stocks, I will say, I don't say this with a lot of ETFs, but like stocks with these weekly payers and the monthly payers even, it's hard to buy at the top. We've seen dividend stocks, you can buy the top over and over again, but with income ETFs, you don't want to buy it after an insane run where the underlying is doing super well and the dividends have all paid out super nicely, and now you're at the top, and then you can bag hold when it falls. But I am happy with this. Let's check out MSII. There were a lot of high hopes with MSII because people love MSTR. But we can see total return is only 2.35%. And I will say we've seen this across the board with a lot of MSTR income ETFs because it's just had a rough go of it so far in 2025. Now, a 13.63% annualized gain is nothing to look down on. That's still very, very solid. And at one point, this thing was up into the $12,000 range, a little over even, which is absolutely amazing, meaning your total return would be 20% plus and an annualized percent of probably close to 100%. But the underlying fell. The market has recorrected a little bit, but I am still impressed. Let's see how it holds up to some of our other MSTR weekly payers and monthly payers. And a quick shout out to the sponsor of this video, Moomoo. If you guys don't know, I use the brokerage Moomoo for all my weekly dividend challenges. I've really been enjoying it, and the platform is simple and easy to use. Plus, they're doing a giveaway right now where you are guaranteed to win some either fractional shares or all the way up to real shares of NVIDIA, depending on how much money you invest. See below, check my link for the full details, and again, thank you to Moomoo. It does outperform MSTY since the inception of MSII. So it started trading in June, so it hasn't been a very long time, 2 months. But during this time, MSTY has just struggled. And you know, a 1.7% return compared to a 2.3 is not that much of a difference. So let's throw in MST. And I'm going to be honest, MST has had a rough go of it. I'm using dividendchannel.com's drip calculator, by the way. And the reason MST has had a rough go of it is because they're more leveraged. So they're a target, I think they're like a 2x on MSTR, and it has not been good. So MSII is outperforming MST. This thing, it just needs to see a correction for MSTR to really do well. And in this market, it is pretty solid, but it really depends. It depends on the underlying. So I'm really, really hopeful for MST in the long run, but the launch was definitely a little scary. NVII might be the top performer of these weekly pairs. We can see total return up 37.38%, and annualized, that's 195%. Is it going to do that? Doubt it. We only have had 2 months out of the 12 in the year, but I'm still very, very impressed by this. We've gotten $1.82 in dividends. So let's throw this against a popular one. Let's do NVDY and see how it compares. I like these style of videos, guys, where I have like less editing. It is fun for me, and I feel like we're more just chatting, right? Like we're just chatting about the stocks, about ETFs. NVII outperforms NVDY quite handsomely, 10% difference in total return, which is pretty impressive. Now I'm using the dividends reinvested model because I like to reinvest my dividends into these ETFs to make more money in the end. But what I am curious about is how it stacks to NVDW. So the weekly pay ETF has been cooking. And wow, it's close though. It's very, very close. We have a 37% compared to a 38%. Very interesting. And here I thought that NVDA would be a lower volatility one, that it wouldn't do as well, but I will say the underlying has performed well. NVIDIA hasn't had any crazy news. It's just been steadily going up, and with it, our weekly payers are as well. So this one might be the king of the Rex weekly paying ETFs, but we have one more to check, and don't count it out because Tesla is a crazy underlying stock. All right, we maybe can count it out. It's up 1.31%, annualized 7.6%. Not the best, but I want to see what TSLY has been doing. I've been getting comments about TSLY, and yeah, it's even worse. So I'm not surprised by that. TSLW, let's see, and yeah, TSII still comes out on top. So that's very, very impressive. Now, these have all been underperforming what I had hoped with this market, but I will say since June, it's just been a little bit rocky. We had some good weeks in June, and some decent ones in July, but we've also had some downturns. So I'm not surprised by this, but I will be watching these very, very closely. And last but not least, just to throw a little bit of shade at all the growth investors that say income sucks and it's not worth it, throwing up NVII versus NVDA, it is actually outperforming. I mean, they can say what they want to, but we have a 37.4% with NVII compared to a 33.10% with NVIDIA. Now, I am blown away that NVIDIA is up 33% on the year. That is amazing. Not even on the year, over the last couple of months. That is absolutely amazing. I'm very impressed by NVIDIA, and maybe NVII is the REX shares weekly payer to hold. Let me know in the comments, what do you guys think about REX and their weekly payers? Do you hold any of their other ETFs as well, including their leveraged, which I think could be very, very interesting if you're into a little bit more risk. As always, thank you guys so much for watching the video. I appreciate you more than you know. You've been amazing. We surpassed 25,000 subscribers, which blows my mind. If you like this video, chances are you're going to enjoy these popping up on your screen right now. So check them out. Let me know what you think. And again, like and subscribe. Hope to see you in the next video.